I'm with Kumwembe with Business Times, a magazine program where we bring you major business and economic news stories making headlines in the country. And coming up in the program today, we look at inflation trends and impact on poverty situation in Malawi. And also in the program, Malawian traders urged to utilize the Port of Nkala in Mozambique. We have these and other stories. Stay tuned. Hello and welcome. In our main story in the program today, Malawi's headline inflation, the rate at which commodity prices change at a given time in an economy, increased by 0.4 percentage points in July to 33.7%, the National Statistical Office figures show. It was expected that inflation would remain elevated due to the rise in food prices. In its consumer price index issued last week, NSO shows that the food inflation went up during the month under review to 41.9%. Non-inflation on the other end was seen at 22.4%. Now, comparatively, the urban month-to-month inflation rate is at 1.3%, while the rural month-to-month inflation rate is at 2.5%. The rising inflation in recent months has eroded efforts to grow the country's middle-income group, pushed low-income earners into ultra poverty, according to economic experts. I caught up with the Economics Association of Malawi President Betha Chikadza, who weighed in on the situation.
Inflationary trends have been, we should say, on the rise in the past 12 to 18 months. And there have been various reasons for that. And we've noted the country has been facing crisis after crisis. Last year we had the cyclones, which wiped out some of the crops that people grew, and that also reduced production of food. We had also, I think, COVID the other years. And as we were trying to rise, we had all these cyclones. We had Idai, we had Freddy, and then this year I think we also had El Nino. So every year we are having these problems that are actually affecting our productivity in terms of food production. And because inflation in Malawi is oftentimes exacerbated by food, but also some part of non-food inflation, but the food contributes highly to inflation. So the moment we have a reduction in food production, we basically know that prices will rise. So last year with the cyclones, we knew food would not be available as it was supposed to be available, and the amount will be reduced and automatically prices will go up. And on top of that, this year, when we had the El Nino, there were estimations with the Ministry of Agriculture and others that I think it would reduce maybe by the production by 16%. And so we had our estimations, and there were also estimations, even projections for inflation. But then later on, I think around June, we noted that what we thought would be the reduction is not what has happened. So the production actually reduced much more than anticipated. And because of that, we saw also inflation picking up, because in some parts of the country, maize was not available. It was completely dry. And so those who are traders, they were maybe buying it from other areas in the country, transporting it, and then bringing it into other districts. And because of that, it was landing in those districts at high prices than anticipated, and that also spiraled up inflation.
What impact does the rocketing inflation have on poverty situation in Malawi? Because we are speaking at a time when a majority of Malawians are in the apse of poverty. What does the rising inflation have to do with poverty situation in Malawi?
All right, so every time there is inflation or there is a high increase in prices, it erodes the purchasing power of the currency. And if I was working anywhere and I was getting maybe about 250,000, what I would have bought with that money would not be the same. So because of that, a lot of people are falling below the poverty line, because if maybe you were just surviving and then inflation keeps on rising, then it means that even the money that you're getting will not be able to purchase whatever you wanted to purchase. And because of that, you'll be limited on how many goods and services you will be able to access on the market. On the other hand, probably those who maybe had, for example, maize, or they are in the sector that is trading, then they can benefit, because higher prices, it means they are fetching good prices of their commodities. In terms of maize, if they're selling maize, then they'll get good prices of maize and they'll benefit from that. But we also have to understand that even if you're growing maize, it means whatever you are putting in the production of maize, it came in highly, at high price, because whether it's fertilizer, whether it's labor, whether it's what, everything will be priced highly. And so the landing price of that maize that you're going to sell will also be high. So it's not like there is a very good benefit that I could tell in terms of both producers and buyers, but all I can say is that I think it's really stinging heavily on the majority of Malawians, because we are a country which we are thinking the most of the people live, just below that poverty line. They're saying, is it $2 a day or is it $1 a day? So if prices are increasing, it means your purchasing power is being eroded. It means that you can't get much on the market.
Looking at the trends, I think there's been that huge volatility in the inflation trends in the country. Is there a lasting remedy to contain the inflationary pressure once and for all in Malawi?
So, this problem is not a one-size-fits-all, but what I think I could say is we need coordination in all sectors. When we're talking about coordination, I see here a private sector which is not vibrant, a private sector which is not generating the much needed forex, because there are also some other bottlenecks in the private sector. And for those ones to be corrected, it can take maybe the government sitting down the private sector and seeing which, what can you produce, what can you export, because we need the much needed forex. And forex is the private sector which is supposed to generate. And the moment you see that this is not happening, then you need to question, what does the private sector do, or what is it doing? Because we really need them to be vibrant. We really need them to be innovative, to know when to produce, what to produce, and when to supply, what to supply, or where. And because of that, we are seeing this country lacking forex, because now we're just banking on tobacco and maybe a few legumes, soybeans, groundnuts, and a few nandolo, I think, whatever. But otherwise, we really need the private sector to come together, to be growing together. But we also have to look at the other sector, because the private sector needs loans. And the banking sector is also something, because they're responding to policies that the Reserve Bank are putting in place. And so we are seeing a policy rate is 26% right now. And so the banks are also responding by giving a high interest rate. And because of that, investors cannot go and borrow and invest. And on top of that, we've seen the government also borrowing a lot from the banking sector, the commercial banks, the domestic market. And because of that, they are eroding, that liquidity that was supposed to be there for the private sector. And so all I was talking about in terms of coordination is we need the physical sector that is speaking to monetary sector. And the monetary sector should also speak to whether it's the financial sector, the banking sector, and also the private sector, because for all these things to work well in the country, then we might see that inflation can go down.
For the first time in over 2 decades, a trainload of diesel was ferried to Lilongwe using a rehabilitated rail line from the Indian Ocean Port of Nacala in Mozambique. This signals for a possible slash in cost transportation for imports into Malawi and exports to the global market, but only if the country enhances use of the rail transport system. We speak with the Mozambican Ports and Rails Director, Niemo Induna, on the prospects.
We now one terminal operating system on place, and we are working as well to bring more digitalizations in the operations. At the end of all of this is that we have a port that is more efficient. We have a port that has more capacity, And if we talk about capacity globally in the 3 terminals, Nacala Port has 3 terminals, namely container terminal, liquid bulk terminal, and general cargo. Altogether, we make a capacity of around 10 million tons. Okay, so this is the port of Nacala today. I think it's also important to underline the fact that we have widened our access to the port, and especially for containerized side. Apart from widening the access to the port, we have increased from 2 to 10 gates. That means 5 gates for gate in, 5 gates for gate out, dedicated for containerized operations. We also built a brand new access road around 1 km of length that is dedicated for the general cargo. Being this said, we are looking at a port that does not have traffic jam when it comes to trucks coming in and coming out, since we have segregation of the access to the port.
Comparatively, to what extent is Malawi using the port of Nacala? Why I'm asking this question, because geographically positioning, I think Nacala is relatively closer to Malawi, considering the distance between Nacala and Mozambique. To what extent is Malawi making the most of the port?
I think that Malawi is not yet benefiting at the utmost position they would if you look at the port of Nacala today. We do, in general, around 30% of cargo to Malawi now. The rest is local. And if you look at the containers, we do around 4 to 5%, which is too low. But I will remember on the inauguration of the port, where we had the great honor to have Malawian president here. And what he said is that this port of Nacala is the Malawian port. So I want to take the chance to say to all of our partners in Malawi that Port of Nacala is in a new condition. Port of Nacala is ready to assist and is now with more capacity, is modern, and come to Nacala, explore, since you've just mentioned its strategic position and it's a shorter distance to Malawi. Not only that, but we can also point out the fact that in this port we do not have congestion. Okay, so the dwelling time of the vessels is practically nil in the port of Nacala, and the dwelling time as well of the containers is also very short. The rail management also is performing very well, in the sense that they have achieved very good KPIs when it comes to turnaround. They are doing around 36 hours from Nacala to Malawi. Also in the port, we are not taking long for delivering of the cargo. The rail is performing well. So, I mean, everything is in place for us to do well in Port of Nacala and use it as preferentially, not only because it's shorter distance, but because we are also performing well. So this is why we say we invite Nacala Malawian partners to use this port that is yours.
For the first time in 21 years, we saw fuel cargo arriving in Lilongwe from Nacala via the railway, which demonstrates the essence or the efficiency and effectiveness of the rail line. Do you foresee Malawi migrating towards use of the rail line as the main route for ferrying fuel from Nacala into the country?
Yes, definitely. That's what I see. We have done last year some volumes of fuel to Malawi. This year we are also doing fuel to Malawi. So I really see, in fact, this continuing to take place. We have our partner, the rail management, that is available, and we are in conditions to actually do block trains. Okay, it can either be block trains for fuel, it can be block trains for containerized cargo, and you can profit of this very short turnaround time for the cargo to arrive in Malawi. If we also create conditions in Malawi so as to not to take long to discharge and deliver the wagon, then we have a very quick turnaround and receiving cargo and receive it. Our liquid bulk terminal has been under rehabilitation as well, and we are talking about a liquid bulk terminal that has 3 loading arms, namely for gasoline, diesel, and Jet A1, and we have a pipeline towards the tanker. So everything is in place again to say that we can use Nacala, and we can explore this capacity that's being used under idleness.
If Malawi was to increase the volume which it uses to ferry fuel from Nacala to Lilongwe Blantyre using the rail line, what is the foreseen impact?
Well, first of all, like I said, we have a rail that's performing well. Okay, so the impact is basically, from my point of view, is reducing the time you take, reducing the cost, and basically benefiting the Malawian economy by using this corridor as your main corridor to deliver the fuel to Malawi.
Last but not the least, what would be your take-home message to transporters and other logistics operators in Malawi in as far as the use of the Port of Beira is concerned?
It's not good for me to talk about other ports. However, I would say this. Basically, there is a trend of wrong information being spread about Port of Nkala, about cargo being blocked. That is a wrong information. Okay, like you've seen during the visit, the tour that we did in the Port of Nkala is performing well. So the message that I would say is that Port of Nkala is not the Port of Nkala we knew years ago. Once we presented the rehabilitated Port of Nkala, we are looking at a brand new port that is performing well, that is working toward digitalization, that delivers the cargo the quickest possible, in the quickest possible time. And aligned with that, we have a rail management that is performing so well and are working together with us so that we can make this corridor stronger. So the message is, come to Nacala, use this port, and this is the Malawian port.
Thank you so very much for your time.
Thank you.
Thank you. Now, in other business news, Malawi Stock Exchange listed Standard Bank has posted a profit after tax of 42.4 billion kwacha in the first half of 2024. Standard Bank head of personal and private banking, Charity Board, disclosed this on Monday during an investor briefing bank organized. The 42.4 billion kwacha profit is 57% more than the 26.9 billion kwacha profit the bank declared in the first half of last year. But despite the significant profit jump, the bank has not declared a dividend for its shareholders. More attributes the profit jump to the bank's focus on making sure that it gives its clients solutions that are relevant to them.
Standard Bank has performed very well. When you look at our profit after tax, we have grown by 57%, closing at 42.4 billion. By 30th June 2024. Our focus on making sure that we offer clients solutions that are relevant to them has been one of our key success factors. When you look at our 3 business units, it means that our clients have trusted us more because we have seen also our deposits growing by 28% during the same period. Digitization has also been key, where we have seen a lot of progress, where our customers are now embracing digital technologies. But we have also been very efficient in how we have managed our costs by innovation, making sure that we begin to see gains from the investments we have made in technology. So in a nutshell, those are the main factors for our performance. At this point, when you look at market capitalization, as of 30th June, we had the largest capitalization on the Malawi Stock Exchange. But also when you look at our share price, it's the highest at 4,400 kwacha. Looking at metrics that we also use in banks, like deposit growth, we had the highest level of deposits compared to all local banks when you just look at the banks, not the groups. Because there will be some banks that are reporting on their group performance, including maybe what they have invested outside Malawi. But when you just look at the Malawi deposits levels, we had attained #1 position during the period. We actually believe our second half will continue to look great. Actually, if you compare to our first half, and what is giving us confidence is that we are seeing more and more clients showing us confidence by giving us their business. We are also seeing more and more efficiencies. When you look at our cost to income ratio, it's already one of the most efficient in the market at 36%. So there are some gains we are also seeing on automations and digitization, as well as credit risk prudent management. We do take forward-looking provisions where we just assess the economy and the market, and we do take some prudential provisions. But at the same time, we are seeing an improvement in our credit portfolio. So all these will lead to a much more solid bottom line as we see it going into 2024 December. We also do look at some sustainability measures. When you look at capital adequacy ratio, yes, it's improving, but we also want to make sure that as a bank we retain as much as possible to continue to invest into the future for more sustainable growth. At this point, I can mention we are in the project of bringing home our FinApp or our core banking system, which is also a substantial investment. But there are a lot more investments we want to do by taking capital maybe to customers, other than just continuing to give to the shareholder at a point when we can actually invest more for the future. Forex shortages remain there. Actually, at this point, it still remains a big challenge. In spite of the fact that we had tobacco inflows, it has not been enough to offset the gap that we have in this market. On the other hand, you can see that there has been some improvement in terms of the import cover to around 2.3%, but still that's not adequate to meet the demand that we have. So we continue also to support sectors that will generate forex into the future. Like if you look at the mining, we are also in that space. Manufacturing, we are focusing there. But at the moment, it remains a challenge, actually, even to support our clients adequately. As a bank, I can confidently say that we have managed to relook at the focus. So if you look at our last 6 months, we have seen substantial growth in customer loans as opposed to what we are placing as government paper. We have also played a big part in terms of bank-to-bank lending, where we have also increased our lending to other banks. So what we have started to do now is to really focus on lending to private sector, much as we are still supporting government, but our focus now is primarily to support private sector growth, which is reflected in our loans to deposits ratio, which has also seen an improvement. In the next 6 months, we envisage, for example, the policy rate to remain within similar levels. If there will be a change, it may not be such a shock. As you may have noticed, from January to date, the policy rate has remained at 26%. But we expect inflation to pick up a little bit because of food shortages that are across the country, but still within the ranges of 33%, 34%, 35%. But going into next year, that's when we are starting to look at a more positive outlook for the country. One, because there's an estimation that there will be La Nina weather, which is characterized by adequate rainfall, which will cover the whole country. So agriculture is likely to come out much better next year in terms of food production. But also we expect the mining activities that are beginning to take place, especially the two biggest companies that have just signed the agreements with government. Most of their activities will take full force next year. So next year is likely to start to see an improvement in our economy, and that will also translate into the business performance.
that story, we've also come to the end of today's edition of the program Business Time here on Times Television. It is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Thank you for watching and stay safe, but always remember, if it doesn't make money, then it doesn't make sense. Bye for now.